Welcome, ladies and gentlemen. This is Anthony with Simplified Profits, and we're going to dig into our transparent account real quick as we added to our positions as they went ahead and descended on us today. But hey, that's why we keep money. It's very important to be able to average your positions lower, ladies and gentlemen. So if you're down on a stock, you got a couple options. A, you cut your losses, you move on to the next one. But what you got to understand is you're never going to buy the bottom. Sometimes you do. Sometimes you get lucky. That surprises me actually how often that happens, but a lot of times you don't. All right, and you can either cut your losses, walk on to the next one. But what happens is you keep compounding losses. Okay, or you can just hang on to it, let it ride, hope you eventually get up and can lock in profits. Or what you can do is you can manage that position. You keep your cost average low, and then you lock in profits when that swing occurs. All right, so that's what we're doing with these positions. Now we added these positions on Friday. Heck, I believe it was on Friday. It might have been Thursday. I don't even remember. Go back and take a look. I think it was Friday. And once we get done looking at the account, we will actually jump on TC2000, take a look at the stock charts, and strategize our game plan. Um, kind of show you what I'm looking at. So GD, General Dynamics. Now we bought our first two shares, yeah, on 112, which I believe was Friday. All right, and we bought another share today. Now we wasn't really down too much on this today to really buy another share, but I said, what the heck, might as well add another share just to bring our average down a little bit. I usually like to wait to see if the position drops 5%. Leverage ETF. Sometimes I wait even more than that to average my position down. But I think we were down like 1.7% when I went ahead and added another share. And right now, our total gain is down 0.83%. So our cost average is 252.75. We're down 0.83%, and it is 25% of our portfolio, roughly close to 26. And I'm hoping I probably will not have to manage that position anymore. I think we'll get a good bounce coming into um, the upcoming ex dividend date and earnings. But hey, we may have to. We still got income that's going to be coming into the account, not this week, but next. And we got $1,000 of buying power. Now here, I don't do margin accounts because I don't believe in borrowing money to trade or invest or whatsoever. I don't like debt. And then DFIN. All right. So we bought our first time on the 12th. Okay. 22 shares. We actually bought three times a day. Yeah, I did. So I thought it was only two, but hey, bought three times. And these are the prices here. We bought 23 shares. And I bought an additional 10 and then an additional three. I think I bought the additional three just to, and we were down about 7% a day. Well, we would have stayed down 7% if we didn't average our positions lower. So we added an additional 23 shares at 2101. And I added 10 more at 2028. And then at 2024, I think I just added three because I had 1,060, like 70 cent, whatever that cost was. Yeah, the 60.87. It was basically we had $1,000, 60, and like basically 61 bucks. And I just decided to go ahead and knock that to a flat thousand, add three more shares, and see where it brought us. So right now our price average is 21.15. We're down about 4%. Watch, keep in mind, ladies and gentlemen, this is a leveraged ETF, and we'll go to the stock charts in a minute. So this moves three times what the normal ETF does. All right, so if that was a stock, I wouldn't want it to stay down 5%. I would continue to try to keep that about 2.5% average. So if I get down 5, I'm gonna try to, lower my cost average to where I'm only down 2.5%. And we're making strategic entries, ladies and gentlemen. So I mean, we're buying at times where it's oversold. If I was buying overbought, man, we'd be down so much more. We can look at the stock charts here in a minute, but we're not doing too bad. Down 4% now. ITA once we get to the stock charts, and this is 40% of our portfolio. So right now we're about 66% of our portfolio is invested, and you can say we got another 34% that we can play with. And if it starts to flatten out, like when we go to the stock charts, matter of fact, let's just stop now. Let's go to the stock charts and we'll dive into the charts and kind of show you kind of my strategy moving forward. All right, ladies and gentlemen, this is the stock charts on TC2000. As you can see, ITA we have up because that is what we are trading DFEN based on. We're just basically using a leveraged ETF to get us a little leverage on our money. Just to take more profit. Just remember that can also create you more losses. And the goal is to manage that position to take a profit. And so it broke down 2.5% today. I'm really just watching the 200-day moving average. I'm hoping that is support. So this could pull back another 3.5%, which would be, 10, 11% roughly for the leveraged ETF. So we would definitely go all in at that point. And with $1,000, we have cash to get that cost average lower and try and lock in profit when it does swing up. Eventually, it's going to swing up. Now, if it breaks the 200-day moving average, I do have kind of a strict rule to sell it and walk away. Being that we would be down, I don't know. We could take it to a weekly chart and do a weekly stock chart trade, hoping it finds some support down in the 106 area and just pile up cash until then. And once that gets oversold, if it does, it could bounce right off here. So that's the line we drew before, hoping it finds support where it broke out of that consolidation area right around the 119 area. So if it does, great. If it doesn't, we have some options. It's one reason you always keep cash, and you always have a strategy that you can adapt and make work for you, right? The goal is not to take losses because once you get in the habit of taking losses, ladies and gentlemen, those will compound. Next thing you know, you'll just locked in a ton of losses. All right, so we're trading DFIN based on the ITA chart. Hopefully it starts bottoming out tomorrow. We could see a swing up as much as 20% in it, which we're down about 4% right now. So it might give us 15-16% gain. I mean, honestly, if I get 10, I might lock it in. It's going to be a year of just really making sure you're not getting greedy on these trades. So GD, I bought another share today. The chart ain't looking any different for me. It's hopefully that 50-day moving average is kind of some support, as this has been one of the few aerospace and defense stocks that has busted over the 200-day moving average and started trending up. As you can see, a lot of them are still under it, just some of the bigger names. So I think I'm hoping this will be bullish and we ain't really got to manage this position anymore. We'll just kind of let it coast, hopefully lock in some profit right around that ex-dividend date, maybe on it or after, and have some more cash flow available to manage the DFIN position if need to. So that's the stock charts. That's our plan. They're all still bullish and oversold. I mean, DFIN is not, but I don't know why that's not really coming up. That's weird. It's definitely oversold. maybe bullish oversold. Anyway, whatever. I'm not too worried about that. As long as ITA is matching it, GD's matching it. So that's what we buy. That's why we put money to work, because that was really the best opportunity we thought out there. So that's what we put money to work in. And now we got to manage that money. And the stock charts, I'm hoping kind of hold up how they do, right around where they are. And we don't have to keep working these positions, but sometimes a swing can take a couple weeks, sometimes it can take a couple months. The goal is to take a profit, not lock in losses, ladies and gentlemen. So let's say this, I ain't gonna get into that now. We'll play it by ear and see what happens. I'm out.